Hello there, folks, and welcome back to another episode of Southbank Live, a very special episode indeed, a platinum edition in honor of the Queen's Platinum Jubilee. For the special episode, we do have a major supporter of the royal family with us today. We've got my good friend and colleague, Nick Hubble. Apologies, by the way, for my voice. I am a bit under the weather at the minute. Hopefully I won't have any coughing fits during this episode. Nikolai can maybe keep me right there. But Nikolai, tell me, how are you getting on over in Australia?
Yeah, doing well. I've just moved here from Japan, so things are still a bit up in the air. The kids are still a bit unsettled, but it's ironic that you've got a cough because the last time we tried to do one of these Southbank Lives, I caught COVID and I was unable to come. And Charlie Morris, our mutual colleague and friend, rescued. I don't know if he rescued you or me, but he rescued us and was able to jump in at the last minute. So my apologies to you, to the audience, and thank you to Charlie.
Oh yeah, no, that was a very entertaining Southbank Live indeed. Though ironically, we did have audio issues with that nonetheless, despite the cough and everything. Not got COVID this side. I was curious. I don't actually care if I've got it, but I did do a lateral flow test just to figure it out because my sister was like, "You've definitely got COVID again."
No, but hold on.
I did think so.
As you know, I did a lateral flow test or an ROT, and that came back negative. And so I messaged you. I remember I messaged you saying, "Well, I should be fine for the recording." And then we did the PCR. I think on the same day or the next day, the day of the recording, and I had to self quarantine within the house.
Oh dear. Oh well, I'm glad you did make it to Australia. Given the lockdown restrictions, Australia has ceased to be a holiday destination for me. But I'm glad you have managed to make it there, as I do know you wanted to get back there. What's your take on the state of the world at the minute, just before we get started with the show?
The state of the world. Well, there's plenty going on. We've been kept busy, haven't we? There's lots to write about, lots to analyze, lots to think about. I think the most important things right now are we're waiting for central bankers to be humiliated again. So they were humiliated by the fact that inflation proved not just to not exist, but to exist and then to not be transitory. And I think the next phase of that is going to be another embarrassment. And I'm not entirely sure whether the embarrassment is going to be on the inflation side or on some sort of debt crisis 2008 style side. But I think it's going to be one of the two. I don't think there is. I think the best way to say this is it's the end of the tightrope. You can only walk so far along this tightrope. You're either going to trigger a debt crisis or you're not going to rein in inflation. At the moment, it looks like the European Central Bank's going the inflation route, and I'm not so sure about the rest of the central banks. That's what I think is the most important thing to take note of right now. And I'm not just saying that because I'm the editor of the Gold Stock Fortunes Gold Stock Tipping newsletter, because that's the key question for gold right now. But I think that's a question for all assets.
Yeah, certainly. It remains the $1 trillion question, right? What happens next when it comes to the central banks? And before we get into our long short segment for the show, a big hello and a good afternoon, or a good morning or a good evening, depending on where you are and tuning into this. If you're watching it live, hello to Andrew, our Cold War submariner, who joins us once again. It's great to see you here, despite on a different time during the day, Andrew. And hello to Fabio as well. If you do have any questions or any comments that you'd like to leave during the show, do feel free just to leave them in the chat. It shall be a quite wide-ranging conversation, but of course, always remember that we cannot give any direct financial advice here because this is for infotainment purposes only, as I would like to say. Just to start us off, Nikolai, have you got a long and a short to share with us this week?
Yeah, I think for my long, I'm going to go politics. I'm bullish on propaganda, on political careers based on statements not backed up by actions, on the political drama. The midterms are coming, the Italian elections are coming. I think there's going to be a huge amount of politicking, a bit like in the 70s, that's devoid from what's actually going on in the ground. And I think that's going to be wonderfully entertaining and a distraction for investors. And I hope too many of us don't get caught up in that. And maybe one way of expressing that is to be long politics. As for my short, I think I'm going to go with oil because I think this potential for a recession is still underrated. And a lot of my colleagues are bullish on oil in the short term. I think we both are in the long term, but I'm worried that in the short term, there's going to be some sort of recessionary pricing in that's going to sink the oil price, at least in the short term. And I think that'll be a buying opportunity. So I'm still bullish on the dirty fossil fuels medium term at least, but I'm worried about them in the short term.
Very good indeed, and plenty we can explore there. Stephen asked, "Can you discuss oil?" We certainly can, Stephen. We shall do that this show. And Angel, who asked, "Hey, afternoon, guys. I have 3 ounces of gold, 200 ounces of silver, and I have £1,500. What would you buy with it, gold, silver, or platinum?" Well, Angel, as stated earlier, we can't give you financial advice as to exactly what you should do, but we can give you our general views on those 3 metals, which we shall do. This week, as this is the platinum edition of Southbank Live, I think it is time to be long platinum, and I mean that in a serious way as well. So I do have a couple of charts that I'd like to show everybody this week. The first one is a chart of the gold price for the 10 years following the Queen's Golden Jubilee. Right, so that's from 2002 right the way through to 2012. And then if we take a look at platinum just more broadly, and this is taking a 20-year chart, we can see that, yes, at the same time, platinum did have a crazy run in the 10 years following the Queen's Golden Jubilee, but then, of course, had a brutal sell-off in 2008, and it never quite recovered from that. I think that as we are now celebrating the Queen's Platinum Jubilee, that we will finally have the time to shine for this unloved precious metal. I mean, there have been quite a few false dawns for it. I've got a little Isle of Man noble here. I'm not sure if you can see it. Beautiful coins. They don't make them anymore, sadly. This is from 1985, I think, so it's got a different portrait of the Queen on it. But I think platinum is actually due for a really good run in the next 10 years. I think the timing of the Queen's Platinum Jubilee fits in quite well as well. And the reason why I am bullish on it is just because platinum has this precious metal quality to it. Loads of people still think platinum is more valuable than gold, even though it's not, and it hasn't been for a long time. And I think that's going to flip again over the next 10 years at some point. And the reason why is because, once again, it's got this precious metal quality that everyone appreciates it. Everyone's after the platinum edition rather than the gold edition, though, unless you go to the Olympics or something like that. But then, of course, they've got bronze, which isn't even a precious metal. But it also has this industrial quality to it. And as the platinum price has been depressed for so long, following Dieselgate with Volkswagen, I think the potential of it will be unlocked by industry. So because it's nice and cheap, industry will start using it a lot more. They will find uses for it, not just in things like catalytic converters and diesel vehicles, but they'll maybe start applying it to other things as well. And for that reason, I think that combination of utility plus value in the actual metal itself will prove to be a very good trade for platinum over the next 10 years, following the Queen's Platinum Jubilee, which was in February, but we are celebrating it now this weekend. Nick, what's your thoughts on platinum and maybe the coincidence with the Queen's Gold Jubilee being a great buying opportunity for gold back in 2002?
Well, I'm sure you're not suggesting there's a causation there with the Platinum Jubilee.
I can believe it. I can believe it.
It seems to me that people often forget in these situations that these industrial metals, especially, are just inherently cyclical. So you go through this cycle of the price being very low, so investment in production falls, and that sets up the boom because there's not enough supply, and so the price overcorrects, and the very high price triggers a huge amount of investment, and that creates a glut, and so the price falls again. So that's the natural commodity cycle, just because it's so hard to find, build a mine, and then mine all of these different resources. And platinum is a good example of that. I've seen some analysis. I think actually, funnily enough, both opinions came from Goldman Sachs. One was that a lot of this metals story has played out, and that the metals, especially those associated with the electric vehicle market, are going to crash, even if their long-term demand story is extremely good, because of this overinvestment and this glut that this part of the cycle that's played out. But then I've also seen, again, from Goldman Sachs, I believe, analysis that the copper market could be incredibly tight over the next few years, and that could be one of the key bottlenecks. So I think the correct answer in all of this is to have some sort of diversified exposure to commodities more broadly. And there's that long-term favorite chart of all of us about the ratio between the commodity index and the stock market, which suggests that we're in for at least in relative terms, a bull market in commodities relative to stocks, financial assets. And I think that thesis still holds true. Which particular metal you focus on, I don't think I'm much of an expert on. I think you should be asking Shay Russell, not me. And I'd just like to mention as well that I think gold and to a 50-50 extent, silver sits apart from that analysis because of gold's, and to the lesser extent, silver's not so much an industrial metal.
Yeah, the silver still has plenty of industrial properties out there. We do get the question actually from Vim, who asks, "Hi everyone, are the renewables platinum hungry in any way?" Well, yes, Vim, they certainly are. So classically, if we look at, well, it's not so much renewables, but it's all about reducing emissions. The use of platinum in diesel catalytic converters was very, very broad and very, very highly used. Of course, the other platinum group metals like palladium and rhodium and gold, in fact, can be used in catalytic converters. And so there is an argument that people could start using platinum in petrol catalytic converters as well, but though it would be less efficient. Outside of that, however, you will still find platinum being used in industry. Though it's less so, though from my understanding, it's less so much on the renewable side specifically. People like to focus a lot on silver being used in renewables for its use in solar panels. But maybe somebody who's more of a platinum bug than I am can answer Vim's question a little bit more. But I would say that platinum is very, very much used, at least when it comes to renewables and reducing emissions. So electric vehicles as well use a lot more platinum than you would find in a petrol or a diesel car, for that matter.
One of the interesting things to note about it is much like the gold and copper relationship, where they tend to get mined together, and then silver is a byproduct of other mining. The platinum group metals tend to get mined together. So a lot of the supply dynamics are really interesting, where if you get a huge divergence between the price of some of the platinum group metals and not others, well, they get mined together, they get priced together to some extent often. So it's that divergence can actually continue and get more and more extreme, and things get a bit weird in that part of the commodities market.
Yeah, certainly. Everyone seems to think that there's just this, when people mine platinum, they're just mining platinum, and it's just this one hole where platinum is what comes out the ground, and when it's copper, it's just copper that comes out the ground. When it's oil, it's just oil that comes out the ground. But there's these big mixes depending on where you are in the world. And that can make really strange things occur in prices because the supply dynamics are different. Funnily enough, we were talking about renewables a little bit there from Vim's question. My short for this week is not renewable specifically, but I'm going to be late to the trade. I'm going to be a momentum trader here, and I'm going to be short ESG. Now, our mutual friend and colleague John Butler has been short ESG on many of these shows, and it seems to be proving a very well-founded argument given what's happening now, and given the fact that BaFin, over in Germany, Nikolai, are now kicking down doors in Deutsche Wealth Services and arresting people for greenwashing, corruption, where you're saying something's ESG when it's not. I think it's time. Am I too late to the trade, Nikolai? Should I be short ESG now, or is this the end of the ESG cycle and it's all about to go up again?
Well, they've hired, I think it's the Deutsche Bank's top corporate banker as the replacement for the CEO who was arrested. So of all the people to hire, Deutsche Bank's had so many scandals, but this greenwashing issue is it's a typical example of what I would expect to happen. Once you create this demand for everything to become ESG, well, then things will just start to become ESG. But to outright lie about it, I mean, everything's ESG these days. It's not that hard to constrain the ESG investments. How could they get it so wrong? But it's interesting to see that the corporate police in Germany are taking quite a hard line against what's sort of a national icon to Germany. It's Deutsche Bank. It's Deutsche Bank. So I'm surprised by it. But they've had so many scandals. One of our former mutual colleagues, a former head of compliance of one of our affiliates, was interviewed for the job of, I believe it was quite high up in the compliance department of Wirecard, which ended up being a huge corporate scandal shortly afterwards. And he said their interviews were incredibly bizarre and weird, and there was clearly something odd going on. And there just seems to be something about German corporate culture that's just odd.
Yeah, there's certainly something odd about Wirecard, and very odd indeed about BaFin, the German finance regulator's treatment of Wirecard as well. Because if memory serves, Wirecard being this enormous fraud in Germany, But BaFin actually, before this was all unveiled, they ended up like prosecuting journalists for investigating Wirecard as being a fraud, if I remember correctly.
Yeah, it was like that or something very similar. And I didn't read the German media; I only read the English speaking media about it because I'm not familiar enough with the German legal terminology to fully understand what they were on about. But there doesn't seem to be much, uh, I guess, criticism of BaFin or of the government or of the regulatory authorities in Germany over all of these debacles. It seems to be very much blaming Deutsche Bank for wealth services and whoever else, and not, it's not, blaming who's watching the people who are supposed to be the guardians, which surprises me. But I think it. I've learned from being in Japan over the last year and a half that being an outsider and looking at corporate culture and looking at how financial markets and economies work is so different to being an insider. And I feel like I'm more of an insider in Germany. So I suspect there are things I just don't see that outsiders would just see as really blatant and stand out completely from their home country. And that difference escapes me when it comes to Germany, where it's a bit like, people always have faith in their own medical system. English people believe in the NHS. The Germans think the German doctors are the safest. And my wife believes Japanese. The hospitals are the safest, and so on and so forth. Or the immunization schedules are radically different between the UK, Japan, and Australia, as I recently found out. And yet, within each country, everyone believes their own country's got it right. And there's the same phenomenon playing out in these corporate scandals where everyone seems to get almost patriotic about it. And that just clouds the judgment and the analysis and the journalism.
Yeah, that's interesting. Though, I mean, contrary to your point, Nikolai, I think I'd probably stick with the Japanese hospitals myself. But maybe I'm not enough of a patriot. Maybe I should
Well,
be.
so I get quite bad sciatica, especially in Japan, because they don't have insulation, they don't have heating at home. So people literally put bubble wrap on their windows to try and stay warm. And
Right.
so I got sciatica quite badly. And so we went to the hospital with my wife translating because I don't speak any Japanese. And I was lying there with the doctor prodding me, and my wife sort of half translates what the doctor was saying. And so he asked me whether I'd consider getting some sort of medication for this. And I said, yeah, sure. And so I was expecting some sort of conversation. And next thing I know, there's a needle in my bum. And some very effective painkillers were applied. And I had no idea what they were. I was never asked if I was allergic to them or anything like that. So it did work very well. So I would be quite happy in Japanese hospital as well. But I'm not so sure, people should go off on that one experience, which as good as it was, and as well as things worked out, I think it's just the thing to focus on is complete difference between the different countries.
Yeah, certainly. And I think in any language, if anyone asks you, would you like some medication, you should consider your words very carefully before you reply. Looking over in the chat, as a response to Angel, who's asking about what would you buy precious metals wise with £1,500 worth of money. Andrew says, Angel, I would go for 100 bottles of claret, which seems like quite an interesting play there. Nikolai, I remember you being rather bullish on the wine side in days gone past. Are you still feeling bullish on the real red asset?
Yeah, that analysis was not so much focused on the idea of wine itself, as much as that has proven to be a good investment at times, but on the idea of wine futures specifically. So the idea of wine futures being that you invest in wine that hasn't been bottled yet. It's usually still on the vine, or there's various different types of wine futures. And this system goes back centuries, actually, even. The idea being that the wineries don't want to take the risk of bad weather, so they get someone else to buy the wine before the consequences of a good or bad vintage are apparent. And so that takes the risk off their hands, so the wineries don't go bust, so they're able to improve the quality of wine over long periods of time. And the investors take the risk, the futures buyers. And obviously there's a risk premium there. So an investor in an average year, in a typical year, should be able to collect some sort of decent return. And if the weather's really good and the wine turns out to be great, then you make big bucks. And I think that's still a really good way to diversify your wealth. I think one of our keynote speakers of our Australian affiliate in 2010, I think the conference was, his idea was to look for yield and returns in places that are outside financial markets, because financial markets are such a complete mess. And he's gone on to do that with his own fund, and they invest in things like disaster insurance. So at one point he explained in an interview that if a hurricane were to hit Florida that particular year, then his fund would make a significant loss. So there's all these, unusual places where you can invest in. The idea being that if you think financial markets are a complete mess and reliant on central bankers and bad regulatory systems and whatever else it might be, bad managers, then you should be looking for opportunities outside of that. And wine was a really good example of that.
Yeah, certainly. Ironically enough, I received a great presentation several years ago on some of these strategies for generating yield outside of financial markets from Deutsche Wealth Services, who we have previously mentioned are now getting their doors kicked in and people arrested for corruption charges. So I wonder whether or not there is any area that is now free of financial markets. So what we think of financial markets, everything that is that, including wine, including things like bridge loans for fast food franchises, including commercial aircraft leasing and music royalties, have since become infested with this capital that is dying for some yield from places like from Deutsche Bank. So I do wonder whether or not it's possible to find a real asset anymore. Is everything real, or is how far into the frontier do we need to go before we can find something pure?
It's that reach for yield story, the idea that people go to ever more bizarre and strange extremes in trying to find some sort of return. And it works as a sort of a wave where, first they look for slightly, typical investments, and they go ever further along the curve looking for more and more strange things. So if you can pick something that's quite far along the curve, well, at some point this wave of money will reach you. And I think that's what's happened to cryptos. What happened to cryptos at one point in the last few years, where all that corporate money did flow in, which caused a big price spike. And so the question is, where will they go next? And I guess a very similar argument to that is Chinese investors really pushed the wine market, the wine futures market up dramatically because they wanted to get their capital out. So that's a good example of a similar story where, whenever you've got these huge piles of money that suddenly need to shift in some sort of direction, our colleague Kit Winder, as we mentioned, he's made a huge amount of money for his subscribers on that same idea of all this capital flowing under ESG to green energy stocks. So it's a really good, interesting way of investing and finding assets, trying to figure out where the next big flow is going to be into.
Yeah, certainly. There are. Really, the sky's the limit when it comes to this stuff, or even it isn't. I mean, we've posted a few ideas about lunar mining in the past, Nikolai. Maybe we can dwell on that if we have time later on in the show. Ian says, I'm with Andrew on the cloud investment. In fact, I have. Problem is the return on my investment seems to dwindle as I sample the investment to see if it is still in good condition. Yeah, Ian, I'd probably be with you on that. It's similar, interestingly, with whiskey and cigars and art, for that matter, when you have wealth from China that either wants to get out or wants to flex on other wealthy Chinese folks. So there is this enormous amount of capital ends up going there, and then you find people who are formerly in the financial industry who are now in this business because they can make better yield there. But at the same time, when you own some nice goodies, and maybe you've had a few beers and you feel, come on, I'll just have a bit of that. It is hard to refrain. But changing gears slightly, Stephen earlier asked, can we discuss oil? Oil is, of course, a very big topic at the minute. Here I am in Aberdeen at the moment, and despite the high oil prices, things are still kind of glum, even though it's sunny. There's still a fair bit of employment. Things are still kind of a bit grim around here. We've yet to feel the real big boost of high oil prices. Hopefully the windfall tax isn't going to make everybody just as miserable as they were before, but we'll find out. But Nikolai, tell me what your thoughts are on oil at the minute, because we managed to hit $120 a barrel. Nice big number. Where do you think we're going to go from here?
Yeah, I think it's all about this recession risk. And I think the recession risks are still not appreciated fully by the market. The thing about geopolitical crises is they come out of nowhere, but they can evaporate very quickly as well. I think a lot of these sanctions that have been placed on Russia, most of which don't come into effect until about August or even later, and that hasn't been appreciated yet either. The real drama hasn't started yet when it comes to actual supply. So far, it's just a price issue. But that can all evaporate. And I think those sanctions are a punt, that the Ukraine war will be settled before the sanctions really have to take hold. And the actual oil supply does get disrupted to the extent that it would if the sanctions apply, especially now that the EU is on board as well. So I just can't see America and the EU sacrificing their own economy over the oil issue. But either way, the oil price is likely to fall. Either the EU and the US go into quite a bad recession over an energy crisis, self-imposed one to whatever extent you want to argue that, or the geopolitical crisis resolves itself and the oil price corrects downwards quite sharply, quite fast. The only way I can see the oil price continuing to rally is if the geopolitical crisis continues and somehow magically the central banks and the governments go back to a huge amount of stimulus for the economy without causing more inflation, which I can't see. I think that that trump card's been overplayed over the last 10 years or more than 10 years now. So I see the oil price falling either way. But I'm certainly no energy analyst or no oil price analyst. That's more of a macro view. I don't know much about the oil supply dynamics over the next few years, apart from this geopolitical angle.
On that, can you expand a little bit on why you think the geopolitical issues will evaporate? So certainly they can, and some of the sanctions have been geared in such a way that it's sort of to offer a way out for Russia or for the EU. But why do you think that it will evaporate?
Because the prices of continuing with actual sanctions that actually do apply and start to take effect is too high. So what we've got right now is already stagflation, but not a recession, whereas a recessionary stagflationary environment, high inflation and a recession, not just low growth, is, well, the midterms are coming up in the US. The Italian elections are coming up and you've got Eurosceptic parties in the lead. So the political risk of a technical recession is extremely high. And we've got the food crisis issue, which is the energy crisis. You can dial it up tenfold for how severe that would be if we do get a real proper food crisis. So I think politicians are already focusing on how to solve these issues rather than how to create worse ones by continuing with the sanctions or making them worse. I also think that Putin is very unlikely, and keep in mind here that I didn't think he'd invade Ukraine, but I think Putin's unlikely to escalate into, say, picking on Finland or whatever other countries, Moldova or whoever it might be. I think that's very unlikely to happen. I think he's going to stick to Ukraine. So if Putin can't escalate, then I think that the crisis has at least a stalemate in its future, if not de-escalating. So the incentives are there for everyone to dial things back. And if that happens, then the oil price should fall fast.
I must say, Nikolai, I'm somewhat surprised how confident you are in politicians being able to figure things out amicably without any consequences.
Well, they've caused a lot of the damage, right? And now everyone's invested in oil stocks because it's the only thing that's been going up. So, just when everyone's positioned themselves for this disastrous future that the politicians have created, suddenly it's all going to evaporate and cause different forms of havoc. So, there's that famous quote that politicians do. It's actually about the Americans, isn't it? But they do everything wrong until all disasters are used up, and then suddenly they do the right thing in the end. And I think that's what's applying here. I'm sure they'll create plenty of disasters for us to focus on instead, but you can only create so much of an energy and a food crisis before things get pretty drastic. And I think when you look at what the EU it was Ursula von der Leyen, the EU commissioner, recently pointed out that if the EU continues to sanction Russian oil, then the price will go up and the Russians will just sell elsewhere, which leaves the EU without energy and the Russians with more oil revenue. So it's obviously not working. Something has to change. And I think when something has to change, you think about what are the possibilities, and almost all those possibilities are going to lead to a decline in the oil price.
Yeah, that seems like a fair analysis of the situation. I would say, I think you're more optimistic than I am, Nikolai, on where this is going. I do hope you're right. That seems like a much better outlook for the world if that were to take place. we woven in with the oil story, we've got the dollar story. So Andy and Lorraine are very interested to know on your thoughts about the dollar at the minute. So Andy asks, is the dollar going up or down as global market decreases and purchases in USD reduce demand?
Yeah, well, there's plenty else going on with the US dollar. It remains that safe haven status. I know you and I both follow a lot of the people who debate this particular issue of where the US dollar goes. I'm not sure, but I want to point out something sort of that people should keep in mind when they talk about this and think about this. Currencies can be a cause or an effect, and it's never quite clear which of the two it is. So when the US dollar goes up, sure, the price of everything sort of goes down just as a consequence of the fact that the value of the US dollar has gone up. But what's the cause and what's the effect here? So it's not clear based on what's happened there, the US dollar rising and other assets falling, which one has caused the other one. So when asset prices fall, people flood into the US dollar. But when the US dollar rises, that devalues all assets that are measured in US dollars and then exchange rates as well. And I think people need to be careful about simply stating that, and this simplification happens all the time. They say, well, everything's falling, yes, because the US dollar is going up. Well, maybe the US dollar is going up because everything's falling and not the other way around. So the simplistic analysis of just focusing on the US dollar, that's a signal, not necessarily a cause. And so the role of the US dollar as this safe haven currency and also as a global reserve asset really makes that analysis very complicated, because it's not necessarily what's going on with the US and the US dollar. It might be the fact that everything else is going bad around the world, or it might be something good about the US dollar. So I don't find that US dollar analysis so helpful because of that ambiguity. When you're trying to measure something, because you've got you're trying to buy a house, trying to figure out how big the bedrooms are, can you fit your furniture and things like that. Trying to analyze how many millimeters should fit into a centimeter when you're trying to figure out what's going on in the house is not going to help you. And that's sort of what, to some extent, people who focus on the US dollar are doing. They're looking at what the measuring stick is instead of figuring out what's going on in the real world and what that measuring stick actually applies to.
Yeah, there is. It is interesting how the debate on the US dollar doesn't actually seem to change that much, despite all of the things that we've seen. So people who are still ultimately dollar bears, saying that the dollar has lost its global reserve currency, are still saying that. And then people who are dollar bulls, saying the dollar reigns supreme over all fiat currencies and commodities, are still saying that, despite the enormous swing that we've seen in the value of the dollar. One last thing on oil and commodities. This comes from Blue Dash, Nikolai. What's your view on hydrogen-related companies? Will they benefit on the high oil price and Ukraine's conflict causing disruption to commodities price and supply? Very good question, Blue. There is always that sort of specter of high oil prices being a good thing because they make all the alternatives seem much cheaper in comparison. What do you think, Nikolai, that we're going to see a lot of great investment in hydrogen and green alternatives as a result of all this?
Yeah, so if you buy that argument, then you would sort of implicitly buy the idea that, well, once hydrogen becomes really successful, oil becomes cheap, and then oil will take over from hydrogen. So I don't think you're really getting anywhere with it unless you're doing some sort of cyclical medium-term trading, which I advise you do in hydrogen, and a lot of our co-editors do that, which is it's been very profitable for them as far as I know. But I think historically speaking, we're talking about long-term cycles here. An energy form replaces the current form by being better. And I don't think we're anywhere near that yet with hydrogen. I've got no idea whether we'll get there in the end, but we are being pressured by governments to make that shift. And I'm very skeptical at anything that happens as a result of government pressure. Maybe hydrogen is the ultimate solution, and hydrogen will replace all of the various energy forms, or will be part of the energy mix. But if the government's the one backing that, I'm pretty sure they're going to make a mess of it at some point, and investors, long-term investors in hydrogen companies, are going to get burned. Just as solar companies, so many of them went bust, and so many of these green energy companies went bust, and it's just another cycle. And this isn't the first hydrogen cycle where hydrogen stocks booms and bust. So once the government gets involved, I think what might be a really good energy transition and hydrogen might be the future solution, is going to go through a boom and a bust phase instead. And whether that means you should invest in it or not, that's up to you, your risk tolerance and your time horizon. I'm going to leave that to our colleagues who focus on those particular companies and understanding that bubble, as I would call it. And then, when it busts at some point in the future, well, I hope you sold out in time before it busted, but I won't be surprised when it does.
Well, it seems like we've stuck our foot in it when it comes to the green sectors. I do see a lot of interest in the chat. Phil asks, how do you see Biden's green funding playing out, as his current failure has not helped green energy plays? So I think this ties in well with what you were just saying about being skeptical of when the government starts coercing capital.
Yeah, well, it's a misallocation of capital, as the Australian economists would see it. If the fact that the government is pushing capital in that direction, is mandating ESGs to the extent that it is a signal. Wasn't there a story? I can't remember where I read this, but you might remember, where someone claimed that fund managers who were pursuing ESG goals were breaching their fiduciary duty, because their fiduciary duty was to maximize shareholder returns or investors' returns, and not to make decisions for their investors about what's ethical and what's not. And it's a version of that Milton Friedman argument, where managers of companies should be maximizing shareholder value, not pursuing social goals or environmental goals, and that is up to the investor to demand from their
market,
fund managers, not for governments to mandate. And it's a version of that idea, and I'm a believer in that idea, because I think shareholder maximization takes into account consumer decisions about what's green and what's ESG and what's not. And I think that does a much better job than government mandates or government regulatory bodies trying to achieve the same thing. But the thing for investors to focus on here is that when someone like Biden is creating these trends, then it's going to be a boom and bust story, as Solyndra was for Biden and diesel was for Volkswagen. It's artificial demand, and it's actually, in my view, a big part of what prevents investment in the things that should be happening instead. So the corn ethanol debacle in the US, which is still ongoing, is a good example of that, where huge amounts of corn are used for ethanol, which is actually an energy losing process at worst. So it's destroying wealth and prosperity, and probably the environment too. We saw with diesel, it ended up being a bad idea, not just environmentally destructive. So all of these things end up, if they made sense, the government wouldn't have to do them. It's that simple.
I think that's a very neat way of putting it. Seamus asks if the green investment sector is going to suffer more as the economy contracts and subsidies are withdrawn by indebted governments. Very good question, Seamus. What do you think, Nikolai? So if you think that the oil price is going to cause a recession, or it's going to put enough pressure on governments that they're going to ease off and the oil price is going to go down, what does that actually mean for the green side?
Yeah, so the green sector is going to be the beneficiary of a significant amount of stimulus once that recessionary side hits. And we saw that especially here in Australia in 2008, where it was a home insulation program. So the government decided, we need stimulus. What are we going to do? Well, let's insulate a bunch of homes because that's environmentally friendly and economic stimulus. And as a result, a huge amount of badly installed insulation ended up burning a bunch of houses down. It's a good example of these things playing out. So that was called the Pink Bats program. And I think you'd expect that sort of cycle to repeat. Governments will think, well, where are we going to spend the stimulus? Well, we believe in climate change issues and green energy. Let's put it there. I don't know if that means necessarily that the stocks will go up, because bubbles are very hard to reinflate, with the exception of property, apparently. But bubbles are very hard to reinflate. So we've had that boom and bust in green energy stocks over the last few years. So I'm not sure if a huge amount of stimulus going into those stocks will work this time around.
Now, Nikolai, there's another observation of yours that I find very, very interesting, as you're a very international fella and you've been all over the world and you follow news in loads of different countries. But you have recently pointed out how the same economic conditions are being blamed on different things depending on where you are in the world. And so you're looking at Japan, America, Germany, etc. And the manner in which people will see inflation, high prices, stagnation, and they will blame it on different things. And I wanted to know what your thoughts are on what's really the cause of this economic malaise, and are there any other insights that we can draw from that, as these markets are quite different too?
Yeah, I think we've had record intervention by governments into the economy as a result of the pandemic in all sorts of weird and wonderful ways. So the chaos that we're seeing right now is exactly what you'd expect as a result of that. Same thing in the 70s, record intervention, chaos. So that part's fairly easy to understand, and there's many different examples of how things have gone badly wrong. So the energy crisis leading to the food price crisis and the sanctions. So all of these things have dominoed, starting from the pandemic, and the cutting interest rates, property becoming very unaffordable. So the pandemic triggered that huge amount of interventionism, which triggered all of the chaos as a result. But the part that fascinates me about it is that story of how differently the same consequences that are playing out around the world are portrayed in different media stories. And that's been fascinating me because of how similar the consequences have been between the different countries, and yet they're described so differently. And it's highlighted how much of a propaganda game politics is, because of course the policy response sort of matches what's being perceived in each different country, especially in the media. So in the UK, it's all about Brexit issues, and here in Australia, the property issues. And so the governments are responding to whatever the people are being told by the media to blame. And so it's not just the blame or the logic that's vastly different between countries, it's then the policies, which causes the divergence to increase, right? So if the same consequences and problems are being blamed on different causes, and thus the completely different policy solutions are being applied, the whole thing diverges even more and more and more. And that's why these things don't seem to get any better, because the underlying real issues are not being addressed.
Right. Can you expand on that a little bit? So what are the underlying real issues?
Well, again, it's various forms of government intervention. So you can't just have huge amounts of lockdowns and expect things to bounce back, because it's the nature of running a business. The airline side is a good example, which is the chaos that's playing out in the UK right now with people trying to travel and huge amounts of flights being cancelled. Well, you can't expect airlines to make us just an on and off switch with huge amounts of flights suddenly being there. It just doesn't work that way. Another good example is pointed out by my friend Jim Rickards, that issues with air traffic control, having enough people in air traffic control, but the government made it incredibly difficult to become an air traffic controller, and then there wasn't any air traffic during the pandemic because so many flights were cancelled and prevented. And lo and behold, there's a bad shortage of air traffic controllers. So when government intervention occurs, it tends to be exposed in what's called a cluster of errors in Austrian economics. So the mistakes as a result of government policies build up, and they're not exposed while those government policies are still sort of functioning. But at some point, all of those errors are exposed at once. And what we had during the pandemic is lockdowns and government control because of the pandemic. And then during the reopening, all of these errors that have built up over time were exposed. All these supply chain issues, the semiconductor issues, air traffic issues, staff shortages, immigration issues here in Australia. There's people paying ridiculous wages and there's still no staff. Property issues, there's like 40 people showing up to rental property opportunities here. And the part of Australia where I'm in is really bizarre, because you've got house prices that boomed. You've got builders going bust quite rapidly. A lot of building companies here going bust. You've got rental yields surging, and you've got record rental demand, and you've got very low inflation. So it's a combination that shouldn't exist when you look at supply and demand economics and property issues. And there's a whole bunch of financial issues of mortgage lending that go into that as well. So these are bizarre economic combinations that only make sense when you look at the interventions the governments have made over the last 2 years. So it's a huge buildup of misallocations of capital, of clusters of errors that are going to be exposed. And that was exposed in the stock market too, with those internet companies that benefited from lockdowns booming and then busting. Well, that's not just happening, in the stock market. That's happening in the real economy, everyday things that we see every day. It's just, instead of being in a share price falling, it's in strange economic things that don't make any sense playing out in our day-to-day lives.
So here in the UK, everything gets blamed on Brexit. In the EU, it's blamed on Russia. In the States, it's blamed on the government or government agencies like the Fed. Now, in Japan, you've said it's government denial of reality. Could you expand a little bit on what that means?
Yeah, people in Japan are not believing the government statistics anymore, quite simply because their lived experience has diverged so much. So Japan's had this long period of deflation. They're used to getting pay cuts every year. They're used to the cost of living being very low and having very high quality. And so when the government tells them that inflation is very low and they're not used to rising prices and they can see the rising prices, then the level of doubt isn't, they're not used to it. They're not used to that blatant of a lie. So it exposes it even more. And they remember the bubble. They call the bubble, right? To us, the housing bubble, the 2008 financial crisis is the bubble. They remember the bubble of the 80s, where everything was getting rapidly more expensive and nothing really made sense, but everyone sort of participated in it because if you didn't, you're missing out. And so they're having sort of it's like a nightmare that they've just forgotten about, and they've just gotten used to this deflationary period since then. And suddenly they're getting the little inklings that it's coming back, and little reminders of the days back then, what things were like. And shares are going up, but it all seems a bit dodgy. And the central bank's bought, I think, 7% of the Japanese stock market at this point. And the government's saying there's no inflation yet. It's still. And a good example actually is my uncle-in-law. He was going to knock down a house and build a new one, a house that he inherited. And he's done neither because the cost of building is just too extreme. He just basically can't build a new house. So he hasn't knocked down the old one, which meant we were able to stay there for a few days, a few weeks ago. And so that's a good example of how the chaos triggered by lockdowns and supply chain is having a strange and unusual impact that normally wouldn't happen in a well-functioning market. And the people in Japan are they're mystified, and they're having these flashbacks to the bubble, and they remembered that the bubble burst. And because there hasn't been that sort of bubble for a very long time, but it was so bad during that time, they view the world very differently to the people in the West who are used to having the tech bubble, the housing bubble, the sovereign debt bubble, all of these bubbles bursting. And it's much more unsettling for them because faith in the government, faith in statistics is much higher in Japan.
It's very interesting. There is always that phrase about Japan being the dress rehearsal and the world being the real event. I wonder how long we'll have to get along before we're at the same level where we're very skeptical about what's going on and the memories of things going past, because I feel like a lot of people have already forgotten everything about 2008 and all the things that happened afterwards, or at least the things that preceded 2008 especially. Now, there is another thing I'd like to dwell on a little bit, but before we do that, just another quick look at the comments. Martin is long solar, hot water, and PV panels while being short gas and oil boilers. Definitely in on the green side there. There was a long short. Yeah, Tom is short silver and long going off grid. Well, Tom, you might need some silver when you do go off grid. So don't bet the house on shorting silver. And meanwhile, Seamus says, don't blame it on the sunshine, don't blame it on the moonlight, don't blame it on the QE, blame it on the Boris. Which is, quick question, Nikolai. Do you think Boris is gonna last? Do you think he's gonna make it as PM?
I can't believe he's lasted so long. But I don't know if you recall this, but when I first showed up at the offices in Southbank in 2018, I believe, that I really recall this very clearly, where I didn't understand why everyone believed Boris couldn't possibly become prime minister. But everyone around me in that office, I can't remember what you said at the time, but everyone was certain that it wouldn't be Boris as the next prime minister. And during that leadership battle, everyone was trying to convince me that Boris was never going to be the prime minister. And I could never get a grip on it and fully understand it. It's a bit like I don't understand why everyone hates Nigel Farage, but that's another story. And then he became prime minister. And then since then, everyone's telling me why I can't last. And I don't think he can last. And I've often thought he won't possibly last. And yet he's still here. And so many crises. so many scandals. I don't know. Is this how prime ministers go? That it's death by 1,000 cuts, or is someone who survived so many scandals in the past mean that he's going to keep going until he loses an election?
Yeah, it's a great question. Funnily enough, Nikolai, that wasn't my experience of being at Southbank, because I remember seeing Boris when I was a kid, when he was just making this massive caricature of himself as London mayor and things like that in order to promote himself. And I could certainly imagine him being a prime minister, but when you're in Southwark, there's different political views all over the place, and a lot of people didn't think it would be possible. Lorraine has a question which I find interesting. As we are, Davos Man is still top of the news at the minute, though people seem to be taking Davos Man a lot less serious these days. So Lorraine asked, Nick, you are so realistic. I admire you for this. But do you think that the World Economic Forum is causing some or all of the chaos? You never mentioned the World Economic Forum. We all know Boris and half his cabinet are Davos men. What do you think?
Yeah, it's not just Boris and that cabinet, is it? I think the World Economic Forum is not much more than a forum. If it wasn't the World Economic Forum, it would be something else. I think that's a bit of a distraction from what actually goes on at the forum, which would just happen elsewhere instead. So I think focusing on that is a bit misleading. I think people should learn a lot more about something called public choice theory, which is basically the argument that entities like companies or governments or government departments or the World Economic Forum, they don't make decisions. It's always about individuals within those organizations making decisions. And if you focus on the incentives those individuals face, rather than saying, Russia's going to do this, or Germany's going to do this, or the World Economic Forum this, if you focus on the individuals within that organization and their incentive, then you can figure out what's going to happen next. And when it comes to the World Economic Forum, that's a group of people who are all about trying to get respect and recognition from each other. So they say ridiculously extreme things like, you're not going to own anything and you'll be happy. And that is portrayed on social media and seen by us as being a totally wacko idea. But if you look at the incentives of that person who actually wrote that, they want to have recognition within the World Economic Forum's group of people. So of course they're going to say something like that. And I think that public choice theory, I've given a very basic overview of it. It's usually applied to governments. But that way of thinking about things takes the conspiracy theory angle or image away from things and still lets you analyze what the people at the World Economic Forum are doing and what they're up to and what they're likely to do next and why they are doing it. And suddenly things will start to make sense for you, why they're behaving in those ways. And the fact that people belong to that group doesn't mean they aren't facing a lot of other incentives too. So I don't think the World Economic Forum is some sort of cabal that has some sort of secret and hidden aims. I think it's just a bunch of individuals who show up who want to get recognition from each other rather than focus on their electorate back home. And yet in the end, they're going to be accountable to the electorate or to whatever the organizations are back home. So instead of focusing on the World Economic Forum, learn a little bit about public choice theory and see how that changes how you perceive what is reported about the World Economic Forum and I guess just how you perceive the World Economic Forum.
Yeah, I would second Nikolai's recommendation to take a look at public choice theory. People like to sort of view cabinets and governments as having, being very like-minded when really they're groups of individuals who are most of the time just seeking their own self-interest, or as some would say, all of the time interested in nothing but themselves. And as a result, the actions taken by governments, by bodies, by think tanks, policy groups, councils at the WEF or the WEF narrative as a whole can kind of can muddy the waters with what is actually going on, which is a lot of people interested in furthering themselves. And so what a lot of people see as a conspiracy is not so simple, but at the same time, it's not so scary and vague as it could be made out to be. So I would definitely second that, Nikolai, to Lorraine. Ian says, while the population of Britain continues to rise, the price of homes will continue to rise because demand is increasing. The prospect of the bubble in house prices bursting will not be anytime soon. Well, Ian, I would be very, very careful with statements like that, as people were saying exactly the same thing in the mid-2000s, pre-financial crisis. And, that population was going up. People were buying more houses. That was why the house prices were going up. They're not going to end anytime soon because the population is going up. Sadly, that didn't turn out too well for a lot of the folks who were using that as their imperative. Andrew, this is quite a dark one. We probably shouldn't end exactly on this. But Andrew comments: consensus on Putin is no nukes, but consensus on Putin was no invasion. A bit of discomfort here. I thoroughly agree, Andrew, very much indeed. I find it very hard to see through the fog with the press at the minute, as so much of it is, to my eyes, overtly propagandistic. People say first casualty of the war is the truth, and people would have said that and said, yeah, first casualty of war, it's the truth before the invasion. And now we've got this invasion, just go straight out the window. Every headline, every claim made by anyone in Ukraine must be believed. And it just makes things very, very hard to understand what really is going on or what actions could be taken. And Nikolai, can you what do you think is going to happen, as you do seem the more optimistic of us both in this conversation?
Yeah, so I'm also the editor of Jim Rickard's newsletter in Australia, and he's been writing a lot about this, and he has some fascinating insights about it. But I want to mention a news story. I think it was in the Telegraph that the human rights representative of the Ukraine, I can't remember the organization, she'd been claiming that lots of rapes were happening by the Russian soldiers in Ukraine, and those claims were then reported as fact in the media. And she was fired from her role by the Ukrainian government because it turned out those claims did not have any evidence behind them. So the first casualty of war is truth, but sometimes a bit of truth shines through. So Jim Rickard's point on all of this is that nuclear war doesn't make sense in and of itself. It's all about escalation. So each side slowly escalates more and more often. And the first side that runs out of reasonable escalation options decides, well, what are we going to do? We're going to either lose the war or we're going to launch the nukes. And the other side says, well, the other guys have got no chance of winning, so they're going to launch nukes, so we better do it first. So it's all about this escalation that leads to a viable chance of a nuclear war, possible chance of a nuclear war. And so the key idea of this is avoid escalation, which is exactly the opposite of what the Biden administration has been doing when it comes to Russia. They've been escalating. And so that becomes the path towards an actual possibility of nuclear war. I don't think that's in anyone's incentive. I think that will be avoided in the end. But the point is that is the path we are on currently. God, I don't know what that means for investors. I don't think that can really be priced in, can it, into financial markets? I don't know how it would be priced in. Maybe it's a huge amount of QE as a result. But I talk about bad news being good news. It'll be a real test. I mean, who would have thought that the pandemic would make share prices rally in the end? But there you go. And another point that Jim Rickard's made, which I find especially interesting, is that it's this sanctions idea really is that the Europeans and the Americans are betting that the crisis in Ukraine will be over before the sanctions really take hold in their own electorates. Because if those sanctions really do take hold, I mean, Putin shut off the gas to, what are the two countries? I've forgotten. It's Netherlands and somewhere, I think.
Is it one of the Scandinavian ones?
Yeah, wherever it was. That I've got the article open on my laptop here, but I can't remember who it is. Two different nations, Putin shut off the gas. And I think it's going to be a sign of, well, if you're actually going to apply these sanctions and not just say they're going to apply in the future, let's see what actually happens. And I think the fact that the sanctions haven't yet applied means maybe the de-escalation is beginning. Again, the same thing from Ursula von der Leyen saying, well, we can't just cut off all the Russian oil because we need it and they can sell it elsewhere. So maybe that escalation curve is already on the decline, which goes back to the oil comments we made earlier.
Yeah, certainly. There are loads of different angles we can take on this, though I think perhaps it'd be best reserved for another episode of Southbank Live. If you'll join me again at some point, Nikolai, in the future, as we are coming on a little bit for time. Just to close, Nikolai, any closing comments you'd like to share with our audience?
The Italian election is coming.
And And
That's all you need to know. But I mean, I know you, Boaz, know exactly what that means. But take a look at everyone at the polls for the Italian elections and have a think about what happens in a world where the ECB is tightening because of inflation and someone other than the former central bank governor of the ECB is in charge of Italy.
Very, very good indeed. A great bombshell to end us on this platinum edition of Southbank Live. Big thank you to everybody who tuned in for this live show. Different time as we do have the celebrations coming up, and the timing is a bit different for our regular Thursday evening slot. But thanks to everybody who has tuned in. This has been a very good one as ever. It's great to speak with you, Nikolai, again. Hopefully, we'll be able to do another one with you in the near future. But that's all from us for the moment. So thanks again for tuning in, and thanks again to Nikolai. Bye-bye.
Goodbye.